I've started the recording, so officially good evening and welcome out everyone to the Trading Foundations working sessions. This is for beginners. Meaning what? Meaning anything goes and nothing complex. We push that to the next one. So if someone wants to bring it up, I'll be like, yeah, sure, we can do that at the next block. Hey, Miguel, good to see you. Yeah, so what we were saying, and I wanted this heard, so I turned the recording on, is about stops and the Fed. And the fact that we don't want to tighten up so much that we end up getting picked off based on the volatility that is absolutely likely to come. If you have the ability, I'm going to suggest that tomorrow around, for me, it's noon, East Coast 2 p.m., Central Time 1 p.m., Pacific Time 11 a.m. You can go to the SPY. I actually prefer to go to the futures. So I go to the ES and I take it down to a 1 minute chart. 1 day, 1 minute. And you just watch the candles. And as it starts to get closer to the announcement, the candles start to just get bigger and bigger. You're like, oh, that's so big. I can't believe how big that candle is. And then the next candle's even bigger than that. You're like, oh my God. It's actually quite a phenomenon. And it'll go down, then up, then down, then up again. And you're just like, what? It's very unpredictable. Michael, oh yeah. Oh, that sucks. I wonder if he's tried changing audio inputs on settings. I'm going to just type that real quick and then I'll move on. Okay. Disclaimer, Cap. Yes. Disclaimer. We're not advisors. We're not brokers. No advice, no recommendations. Illustration, education only to the platform. Thanks for keeping me on track, Cap. We're off to the platform. Let's pop over. Okay. Let's talk about it. So the market finished flat. The futures are steady and slightly positive. Stocks hold steady as world awaits Fed decision. Fed rate cut decision risks investor angst. Will mortgage rates also ease alongside Fed cuts? Okay. That's the news. We know that to be the case. Here's our economic calendar. So tomorrow we have... I did that and it didn't work. No good. Okay. So tomorrow, housing starts, building permits, nobody cares. 2 o'clock. 2 o'clock Eastern. And then the market reacts, then settles down, and then as Powell starts speaking, it reacts again. There is no safe harbor. It's coming for you. Okay. Well, let's talk about this. Let's talk about this. Maybe. Let's talk about. I'm gonna relaunch that to update. Apparently, let's talk about the market. SPY. Any trade adjustments? If you stayed in, Palantir, Amazon both hit their targets. Curious if anybody closed on those targets or near those targets or after those targets. Here's the market. You can see we finished up just ever so slightly. As you look at the way that we played this out, we gapped up, ran a little higher, and then fell off, and then stabilized that way the rest of the time. Yeah. We're bumping up against some resistance right now. I mean, so clearly up against this resistance right here. Stochastics rolling over. Now you might think, oh, Scott, it's a red candle, and we have potentially above average volume. We have 47.1 million versus 49.3. 49.3 divided by 49 point divided by 41.1. 43.3 divided by 41.1. Oh, it's 5%. Barely, but it's 5%. Does that mean we're going to score it bad for volume? No. No, because it was a flat day. It wasn't a down day. If it was down here, I would, but it's not. It's up here. Remember that red doesn't determine. It's got to be today's close versus yesterday's close. And with today versus yesterday, we were actually slightly positive. So, what else do we have going on? Well, this is a little bit of a problematic. This VIX is tough. It didn't close above the prior day's high, but it did definitely turn. Did anybody put a hedge on today? Yeah, I gotta tell you. I mean, this VIX definitely has me concerned. And the problem is, if you're gonna get a hedge on, you've got to beat the Fed announcement, right? We can't wait for the Fed because by the time we recognize that it's not going well from the Fed perspective, it's going to be probably too late. Okay. Let's talk about a hedge. So, where's my, I lost one of my platforms. Let me get this log back in real quickly. Okay, so what are you in? What did you do today? Any new trades? Any closed trades? Are you still holding everything? Give me a sense of what you're doing. I am going to log in. Did I already open it? I think I did. Yeah, okay. 63.37. So it's come back down a little bit. Holding closed one from a service. Okay. Okay. Yeah. Let me get this. Oh, no, I did have it up. We talked about this yesterday a little bit. We're going to look at 3 possibilities for how we might trade this thing. Fourth by the 18th. No, sorry. What are we looking at here? These are a couple of different, we're going to talk about hedging. If you have a specific trade, we're going to go through and look at some of the ones that we've had on as part of our working session. We're going to look at we're going to look at the things that we've had on. We're going to look at these hedges. Let me also look at the possibility of a spread. Let's try a 570, 565 bull spread. Let's see. We're going to buy 570, sell the 565. Okay. So we've got a couple of things to choose from here. That's not one of them. We need to buy. What was the strike price we used? Current price. Let's go 565 times 0.95. What is that? 5% out of the money. 595. That sounds right, doesn't it? $595. Wait a second. That's not right. What did I just do? 565 times 0.95 is... I divided it. I'm like, what the hell? That doesn't make any sense. Times 0.95. 565. 565. That's a little more reasonable. 5% out of the money. Oh, they are expensive, you guys. They are expensive. $964. And that's not even... Nope. 535. 275. Still expensive. Still way more expensive than what we're used to or what we want to pay for protective puts. But we just wanted to kind of express it, right? Like, okay, what would it look like? Let's isolate this. If I'm wrong, and I was going to get out of this trade, so this is just an SPY. I want to just get a sense of the contracts on this. I would definitely be wrong by, let's call it 570.5. Let's just use that for help. So I'll go into analyze, and I'm going to go 570.5. And 535, let's see. If I ended up with 3 of these contracts. So that's a hedge right there. Now, you can see even with 3 of these, and controlling my risk a pretty good amount, I'm still taking 450 of risk. They're a little bit more expensive than maybe some people are used to. So what can I do as an alternative? Let's start up here at the calendar. This is be ready to ask questions as they come, because I have to imagine that you're going to have questions. Okay. Where were we? Risk profile. Single. Now, I'm out a week. I'm out, actually, yeah, I'm out 1 full week. I maybe want to even go just a couple extra days. 1, 2. That's the Friday. Now, where do I think this thing might fall if things got nasty? Let's go back to the SPY. At the very least, we'd think it's going to fall back here to 540. A little more aggressively, maybe down here to 522.5. So you can see that even at 540, I'm getting 3-1 on my money. I'm risking 5 to make 15. If I get more down to 520, that's when things really kick into my favor. So that's what I want to have by way of prospect. This isn't a speculative trade, but we still want to look at it and ask ourselves, do we think this has a good idea to move down? Well, the spit policy yeah, the policy with that is a little bit different as far as the amount of premium that we have to pay for it. So let's just look at that. We've got a single, then we've got a vertical. So look at the difference here. Now, I know I said beginner today, but because this is a hedge, I want to present all three, because even as a beginner, you have to decide if you're going to hedge, and if you do, what trade are you going to take, right? The easiest one to understand is the beginner trade. That's this one that we're on. You can see my check mark. That is what? Buying a put. I'm just buying a put. It's pretty simple. Time works against me, but if things fall fast, I should be okay. And you can see I could get 5-1, 9-1. Sorry, over 9-1 on my money. Okay, that's got plenty of prospects to it, right? But that's a pretty good drop. That's a full correction almost. 570 to 520, 50 points. That's almost 8.5%. So that would take quite a bit to get there. I wouldn't expect the whole trade to get there. I'd expect that I take some profit and then maybe I have one more position still on that I ride to that point. Okay, that's the single. Now, Clint. Yes, Clint. Clint had experience doing a debit spread that he put on in a hedge capacity. Am I getting the right person? I want to make sure that I got the right person. Let me know if not. Yes, thank you, Clint. So that would look something more like this. So you can see very similar. I make money as it drops. I lose money if it goes up, just like this. This works the same way. Make money, lose money. But if you notice, though, here, as long as it doesn't go up, I'm going to be fine. Looking at 555 by 545. Okay, so you're down a little ways. Let's see how that would look. Okay, what am I doing? Analyze trade. You said 555 by 545. Buy the 555, sell the 545, uncheck this box. Okay, now, what you'll notice is it's really got to drop down there. So we're looking at two different things here. Here is a vertical. Let me take off this. That's one trade right there. But then we would have to decide, what do we do with it if it goes up? Right? You can see that here, if it goes up, this is what I don't like about it. You're negative on time decay. Right? And so it's anything above here is negative on time decay. The longer it takes to get there, the worse the trade is going to be. And I ideally don't want to put myself in that situation. If you look at the way I have mine built. Oh, that was mine. Let me see. 575, 560. Me as well. October 18. Me as well. I think that's plenty of time. October 18, 2024, 555 by 565. I'd almost feel better going this way. 565 by 555. Why? There we go. Wait, no. Now what I want you to notice is that over here, I'm close. I'm tucked in. I'm not out in this exposed time decay area. I'm really tucked into this right here. And our target, you don't even see one. That's max gain. The other one was 540. You'll see that that's actually pretty close to max gain as well. So if they had put it on and stick with it, they'd be looking fantastic. But what do we have now? Same kind of a situation. You have a put you can buy. You have a spread you can buy. Yeah, any of those things are reasonable in making that work. Let's go through the list. Actually, no, I'm not there yet. Let me go through the calendar spread. Do you have any questions about what we're doing here with these three types of trades? Okay. Okay. What I want you to notice is that even on this one where it says 540, we would never let this drop to 520. If it gets to 540, I'm so close to making all of my money that why would I not just stay with it all of a sudden? Okay, let's do one more just to make it a little bit more difficult. And let me see. %, even 80, Clint, even 80, right? Like that's it. If I got there, I'd be like, yeah, done here. The last one is a calendar spread. Now, what's the difference? I want you to notice that here, look at my Vega. It's negative. But if I do a calendar spread, it becomes more positive, right? Oh gosh, right? And that's the worst kind of burn. If you didn't see what he just said, he said that he's been burned trying to hold for more, and it's like, yeah, and that's the absolute worst is getting burned when you had it. You had it, and then you just didn't close the deal the way that you needed to. Okay. Now, this counter spread, you might be thinking, wait a second, we're here at 563.45. But we think it's going to drop. Yeah. So what do we do? Let's start with 540. Now that's our kind of our secondary target, right? So with that in mind, with that secondary target in mind, if the market drops, remember what's going to happen. So if the market drops, implied volatility is going to rise. Let's go look at the VIX. If the market drops, we'll likely go from a 17, possibly up to a 22. That's 5 points. Can I reflect that? Yes. Yes, I can. Most definitely I can. Okay. So what are we going to look for here? You'll notice that if I do this trade and the market goes up, I'm only risking a couple $100. If I do these other trades, now this is a different story over here. Let's go through this. Oh no, that's wrong. There we go. That's better. Okay. Let me get rid of this. Okay. Now. We want to look at just the calendar. And we're going to look at if implied volatility goes up. How do I do that? Right here with this cog. And I'm going to raise the volatility. Now, I want you to notice what's happening as I do this. I'm going to go all the way to 5%. Yeah, okay. Okay. If you notice what's happening, it's pumping value in, right? At your target, you're making $2,000. If I don't get that volatility, if it goes back to zero, oh, wait a second. Did I go inverted? No. Oh, that's interest. Sorry, guys. It doesn't make... I'm jumping all over the place. $2,000 here. $2,600 here. So just that implied volatility provides for an extra $600 in profit. Where did that 600 come from? It came from the Vega. Look at the Vega. Your Vega is 237 times what? Times a minimum of 3%, right? That's why we like knowing that. Okay. Yeah. So questions about hedging. 3 different possibilities. Any questions about any one of those that we need to talk about before we move on and start looking at the watch list? Nothing. All right. Good enough. Good enough. We'll keep an eye on these. These are all interesting enough. I'm gonna lock them in. Yeah. I need to rewatch this video. Yeah. Yeah, I get it. I get it. So let's talk about these in margin requirements. There are no margin requirements. Now let's think about risk and number of contracts. If I did this, I would say yeah, I think that actually these numbers are okay. Yeah, I think we're going to just kind of leave these. What are the advantages? If I buy a single put, it moves fast. I make money quickly. I can't lose more than I put into the trade. Although these are all debit spreads. How would you decide amongst them? Let's talk about that. Here, I would probably do 3 of these. Now, what I want you to notice is I can make over $22,000 if it gets down to my target on this one. Not on this one. Not nearly as much. I just don't have as much potential, right? Yeah. So how would I decide? I want time on my side. If possible, when we get into these higher implied volatility scenarios, my target is 540 initially. Yeah, which is what? Just a little bit more than 5% only. It's not a big target initially, right? Okay. What do you guys think about that 540 target? If your target got worse, it would be fine. Now, how many of these calendars would I do? I'd probably be able to do 4 of these. Why the 9/26 date? I'm giving it a week and change, right? I'm giving it until Friday of next week. And that's what I'm looking for. Right? Friday of next week. Making sure I have plenty of time. I'm gonna if we get I might put an alert for a hedge trade and just make sure I acknowledge that it is a hedge trade. But certainly that's part of what we're looking for, right? Okay, let's keep going. What's the best features of each of these? This trade here is theta positive. I make $9 a day. The longer I'm in, the better it gets. And it's vega positive, which means I make money as implied volatility goes up. So both of those things inevitably play in my favor. So that means that when it comes to the buying options, I'm simply choosing what I think are better options. Okay. That's the calendar. The vertical is also theta positive. It's also vega positive. No, it's not. It's theta positive, but less so. I want you to look. Less theta. It's vega negative, right? Very small, but vega negative. Okay. Questions about strikes, questions about dates, questions about Greeks. I locked these in so we can keep looking at these, right? We'll have the ability to keep looking at these, no problem. Okay. I wanted to make sure we spent a good amount of time on the hedge. I'm going to label this. Remember that what's causing the hedge is the higher low on the VIX. Right? A higher low on the VIX. This here relative to this here. Higher low. We've got that coupled with the Fed and what the Fed is doing. So those two things definitely have us, I think, exercising a good degree of caution, right? A good degree of caution. Okay. This is your chance. 5 weeks out in time. 5% out of the money with the call or with the puts to try to keep them a little bit cheaper. But the spread tends to keep those costs down a little bit more organically. And then when we consider a calendar spread, it just sort of opens everything up. Well, you guys are making it easy. That must mean it makes a lot of sense, right? Or it means we just need to keep talking about these specific trades this week. Which is your preference? Number 2. Why the 570? Let me go back and see what you mean. The 570, 565? That's just, I just like going $5 wide. I mean, there's really no specific rhyme or reason that we have to adhere to. Yeah. What's the difference between Vega and Theta? Vega, V, for volatility, tells us how sensitive are our trades to changes in implied volatility. So if Vega is positive and volatility goes up, you make money. If it goes down, you lose money. Theta is time decay. How much do we gain or lose for time? I want to be time positive and theta, which is theta positive and Vega positive as well, if possible. Those are both very helpful to me in my trades. Okay. This one, remember that the calendar spread is around my target because this is what it looks like. This is where we are now. I want it down here. I want it to drop. So, yeah, that's the difference. Okay. Yeah, you know what? I'm just going to bring them up. We'll just talk about, don't let me forget. Don't let me forget. Tomorrow I can, we can talk about it. We can see as it goes. But if you're going to do it, you're probably going to be doing it pre-fed, right? Okay. All right. Well, that was a good chat. Takes us right to time for the first half. Let's take 5-minute break. Let's take a 5-minute break. When we come back, we're going to go through the watch list. We're going to see what trades we have on and what we want to do with anything, what trades we're thinking about, and then we'll go from there. The 570, 565, you're right, Clint. It has the least amount of work to do, right? That's what he's saying. Hey, if it just sits and sits and sits, that one will be fine. If it drops, that one. So there's pluses and minuses to each of them. Yeah. All right, let's take 5. I'm gonna get the slides put back up, stretch your legs, get a drink, use the bathroom.